Good morning, traders. Today we are back looking at Bitcoin, and we need to start by addressing the recent bounce. Bitcoin saw a short term relief overnight, and that was driven by a broader improvement in risk appetite following Nvidia's massive earnings report. However, while Nvidia beat expectations, they signaled a reluctance to return massive cash to shareholders, opting instead to reinvest heavily into AI infrastructure. So while risk assets got a temporary boost, this isn't necessarily the macro catalyst Bitcoin needs for a sustainable run. So the reality is, as long as Bitcoin remains below the 74K, at least for the short term, I would say, the broader bearish structure hasn't really changed. But now, what do I mean by bearish structure? Well, if you look at the daily chart, this recent bounce from 62,000 and a half all the way up to, let's say, 70K, which was, of course, rejected initially, um, we are looking that coming in without an actual divergence on the other side. So without that meaning, of course, that we only need a divergence for markets to reverse, it's a confirmation tool. And it might just simply be a bull trap, okay, within a larger correction. So in fact, if prices roll over from here, we could actually form a hidden divergence and mark a lower high. And this would also match with what I'm expecting to happen. And I'm going to tell you exactly what I'm going to happen. As you see here in the longer term, we have identified even the last video that we saw about Bitcoin, a 5 wave leg to the upside that was followed by an ABC correction, which means the top was really in pretty much the real top at 110K. And this is a flat pattern, which means we have a 5 wave leg to the downside now that either finished or is about to finish. I am in the second quarter, is about to finish, and I will explain why. The other scenario we looked is that the fifth wave was actually finished here, and if the fifth wave finished there, then this would imply that this was an ending diagonal. And if this is an ending diagonal, which is still something that can play out, we have 5 waves down, we will get a correction and then further continuation to the downside, which means, wave four is going to come back into play, the previous wave four. Okay, we are, so in the long term, we're between an ending diagonal up in that top or an ABC flat. And I am actually leaning towards the ABC flat. Now, did this move end? To me, it doesn't look like it ended. First of all, I said no technical divergence, it's one fact. But the bigger factor is the cyclical, historically proven patterns that we know um, reoccur every 4 years in Bitcoin. And what does that say? And just to go a little bit further back to the top, I was expecting Bitcoin to top in October. Okay. And this is pretty much what happened. Okay. Now, based on cyclical relationships, Bitcoin turns in November. Okay. So if we are now in February, this is unlikely to be the bottom. Okay. It could still be the bottom, but it's unlikely that we're going to see this like turning higher slowly, and then come back low with a very deep correction and end up being in November around that low. It's a bit unlikely. But what is perhaps more likely is something that would also offer us a divergence signal. Now, typically, as you know, in the fifth waves, we have either an impulse that is a 5 wave move, like this impulse, no overlaps between the waves 1 and 4, or we get an ending diagonal, more like a wedge, which has overlaps between waves, pretty much all waves. This would suggest that this could be forming currently as we speak. So eventually we might be looking at a large ending diagonal here. Okay. Although, again, not sure how long this will take or if it's going to play out. The scenario that I'm looking, though, it's this, because there is more likelihood for the ending diagonal to print versus seeing a move to the upside for wave A to the 100K, and then another correction down for wave C. It's not unlikely, but I'm just saying it might be less likely. So we're still between, of course, these two scenarios, that this is a flat with five waves down, with a fifth wave not finished yet. And there is a scenario of a ending diagonal up here. This is wave A with either fifth wave finished or not. We're going to see a wave B and then another leg to the downside around below the 50K. So we are to expect still a move up to around the 100K. So in this particular case, what we're going to watch is whether we are able to reclaim at least the 50K and then the 61.8 Fibonacci at 101K. So this is a very important zone, as you know. Okay, all of this is very important zone, and it will tell us whether this is going to be a corrective leg and further continuation, and whether there is a lot of depth in this particular pullback or not. Is it going to be a pullback or a deep? Because we could go all the way up to 112 and then start rolling again lower now. Now, because though we are in the shorter term, what we're going to do is we're going to pull our Fibonacci in the last wave to the downside. And you're going to see that our 38.2 Fibonacci retracement, that's exactly the 74K, which is the previous support level that we've identified. So for now, as long as we're below that level, the structure remains bearish. And the reality is we could go all that way up. To me, this is more like a magnet zone, to be fair. So if I were to trade this and do a long position, I would do in the immediate breakout of 70K. Yeah. Would go for the 38.2 Fibonacci. And I will place a stop. I will place a stop very close to in the middle, just below the middle of yesterday's price action, if that makes sense. Otherwise, this is not a trade that is actually worth taking. Unless if you want to play the bottom in situation, even for the short term, all the way up to 100K. That's a different case. Or the other thing you could do is that wait for the breakout above the 70 and trade the pullback. And then the pullback will take us up to around the 75. That adds some sort of confirmation. But because yesterday's price action was a little bit heavy in terms of how much upside we saw. So we saw like a nearly 10K candle to the upside, like nearly 10% upside. So anywhere you put your stop loss is not going to be considered to be quite tight, if that makes sense. So we've talked about the macro cycles, and that though necessarily doesn't mean that there's going to be analysis on. Just reminding you that the cycles work for Bitcoin, not for altcoins. The altcoin situation was very different in the past bull run, but well, the reality is that we're still sitting here looking at this price action currently, and are more interested in Bitcoin rather than at altcoins. Macro cycles are still for Bitcoin. In the big picture, it's what happens. Capital is supposed to rotate into altcoins, but well, we haven't even yet seen a a significant upside for Bitcoin to and a stalling at some point to then follow up and see whether some capital is rotated to altcoins. So for now, let's just call this a five-wave move to the downside that is likely to see at least a correction in the ABC correction that could perhaps take months. Or alternative, we might form an ending diagonal down at this level that will keep prices levelly flat but choppy for the rest of the year. To be objective though, let's not forget there is a dump to like 60K or so. Could have been the end of a complex fault correction, wave 4, meaning that bottom is in right now. If that's true, we are starting a new five-wave impulse to the upside, but given the current price action and momentum, the most likely scenario remains another leg to the downside, either in the short term or after a move all the way up to 100K.